The broadcast is now starting. All attendees are in listen-only mode.
Okay, let's see if we can get rolling here. Answer this question. Okay. Good afternoon, everyone. Today is October 24th. It's almost 1 o'clock, and it's another episode of the CFRN Thursday, which I'll take an hour out of the day to go over the CFRN Trade Set Up in slow motion. Not my son playing baseball, but this one. So what I'm going to do, especially for those guys that are brand new, let me get that one up. We're going to go over the trade setup. It's going to be the same setup that Michael's using inside the training room. The idea for you, this is going to be a great cheat sheet or syllabus for you to lean on, because some of the buzzwords and some of the language and things that he's talking about in the room, we'll have a chance to go over and you'll be able to recognize. So that means during the trial, you're going to absorb what's going on instead of sitting there with deer in headlights kind of action and wondering what the heck is going on. So the idea is to give you an eyes wide open approach of what's happening. So at the end of the trial, when you do get an offering from them, you can sit down and say, hey, I want to do this, or I want to pursue this, or I think I can do this, and I want to do this. And do I have the time to do it too? So that's the goal, all right? Kind of introduce you to the trade setup. Additionally, we will pop inside a live environment. In fact, let me shut this down. We will pop inside a live environment and we'll go over the trade setup. What we outlined here is what we'll try to observe in a live market. Okay. Not only that, what I'll end up doing is going inside this tower, or we call it a DOM, and you'll see me place orders. You'll see me get inside. If we get a bullish set up, I'll left click in the green, and if we get a bearish setup, well, you'll see me left click in the red. Okay. So you'll see me enter trades. You'll see me place a protective stop, and then show you how to manage the trade and bring the stops to break even and stuff. So you'll see that in slow motion. So to give you a chance to see what's going on and how to do that kind of stuff. Okay. So that's the game plan for this afternoon. If you have questions, just pop them in the box, and I'll be happy to answer each and every one of them. So don't be shy, especially if you're new. Okay. For those that are already CFRN members, this is a good time for you to get to know the personalities of the markets that we're trading. So that comes with more screen time. That's actually, executing stuff on the DOM. All right, going through the motions. I know it's not real dough, and you're not going to feel the little turbulence in your stomach, but the idea of going from looking over here and then pushing a mouse over here, that takes time. Okay, so and it takes practice. And the good thing is, Dwayne and Michael and Valerie, they're really proactive in saying you should practice. Not everyone takes their advice, but that's what you should be doing first, and I totally agree. So you'll get a chance to see what's going on in the marketplace. More screen time is always good for you. You'll get a chance to ask questions, but I'll also go over some of the common traps that people fall into. So over the years, and I've been around from day one, and I've seen plenty of screenshots. I've done plenty of one-on-one go-to-webinars with people and mentoring sessions, and there seems to be, some common mistakes that people kind of fall into. So again, I'll highlight those. So if you all fall into one of those categories, maybe if you see enough of these recordings, some of it'll stick, and you'll avoid the little pitfalls that some guys fall into. So that is, again, that's the game plan for the next hour. So before I present, let me do this. I have to go over the disclaimers. So this is the compliance part of the program. But, you know, again, and I say this over and over and over again, I really don't like to throw this up in view and then tell you to read it and then, you know, put it under the blanket. I'll take a few minutes to go over it because, again, this is a eyes wide open approach, not only to the CFRN setup, but, you know, to some of you brand new traders. And this disclaimer really is for you guys. And it's basically what it says is, number one, trading futures is risky, right? You can lose everything and some in your trading account if you don't have a trading plan, you're not using stop losses, if you're not engaged in what's going on in the marketplace, you're not watching over your account, you're not watching the market, you're not in tune with what the reports are for the morning, okay? If you don't do those 5, 6 simple things, this disclaimer really will hit you right smack dab in the gut, okay? So it doesn't even have to be, that's just a general statement, okay? That should apply to anything that you're doing when it regards to futures trading, even stock trading. It's the same thing. You have to have a plan, okay? And if things are going wrong, what's your exit strategy, all right? So it is important. So that's why I kind of highlight it because, you know, the guys that really knock on the CFRN door kind of numb to this disclaimer already because they've been to this guy and that guy and they've learned this and this and that. And so they've gone around the circle pretty good and they're now getting a good taste of, you know, what losses feel like. And now you kind of feel a little bit desperate, you know, oh, I got to make this work. How am I going to make this work? Where am I going to stake my flag in the ground? Where am I going to feel comfortable? So people are just trying to figure it out. And I get it. I've seen it. I've been doing this for over 25 years, so I've seen the good, the bad, and the ugly when it's come to trading. Okay. The good thing is, with CFRN, we're going to go over plan, right? There's basically 4 set of rules, so we're going to check that box, right? Every trade has an 8 tick stop attached to it. Okay. So we have an exit strategy if everything goes wrong. So we're going to check that box. We're going to be on a 4 tick range chart. Okay, so that means we're looking at the market under a microscope. So we have to be engaged in what's going on, right? We have to know the rules and what's going on a very small time frame. That checks that box too, because you have to be engaged in what's going on. CFRN, one of their major rules are you don't trade around news reports. Well, the good thing is, with the platform, I'm assuming that everyone has DtPro up and running and you're inside. If you go up to research and ideas, just at the economic calendar, it's right here. It's at your fingertips. So there's no excuse why you don't know what the news reports are and what time they come out. Okay. So basically it checks that box too. So, you know, all those things, all those little earmarks that said, you know, what causes people to lose dough. Well, we cover a lot of that in the training at CFRN. I'm not saying it eliminates it altogether because there's always that crazy time where it doesn't matter what's happening in the world. You know, things just get bad. You could be on the wrong side. But the fact of the matter is you're going to have a plan. You're going to have a stop. You're going to be engaged in the market. All that stuff. Okay. Let me tell Sam I added to the gold. So 1 second. Sorry, guys. Let me just tell him yes. All right. So it does cover all of that. Okay. The other thing is, Past performance is not necessarily indicative of future results. Okay, I have it highlighted because in the past I normally didn't cover that, but in our last audit they thought that was important to talk about, so I put it in red just for that reason. In addition to that, the funds that you put in the trading account should be risk capital. That means it should be funds that you can afford to lose. It's not going to change your lifestyle. That's kind of the definition of it. So that's also part of it. Okay. The next slide, and then we'll get on to the rules, because I know this is kind of not a great way to start a webinar, but again, this is an eyes wide open approach, and that's part of it, right? The risk involved in trading. We have a lot of brand new guys in the room, and they should be aware of it. So, so I appreciate your patience if you've been around the block. Basically defines my relationship with CFRN, because some people think Kurt works for CFRN and CFRN works for Daniel's Trading. No, there isn't. It doesn't work. There is a line in between us, okay, and that's why I'm defining it and disclosing it so you guys all know. My role in this, I support the platform. Okay, DtPro is the trading platform that you're seeing here. I support the platform. If you decide to take the CFRN path and you use the DtPro platform, the same platform that Michael's using in the training room and the one that Dwayne's using, if you decide to go down that route, I also support the execution, the brokerage, that side of the business too. Okay, so if you have problems downloading the platform or the indicators, or if you have questions about setups and stuff, everything's fair game. All you have to do is call and email. Okay, the biggest difference between us and our competitor is actually you can call somebody and talk to somebody. Okay, the good thing is the person that you're talking to knows what you're looking at, the platform that you're using, and actually teaches classes on the setup. So it's a win-win situation throughout. All you have to do is raise your hand. Okay, I'm not going to knock on your door and say, you okay, you okay, you okay. Just raise your hand. Okay. The reason I do the CFRN Thursday for 1 hour is because there was a demand for people that said, look, can you slow this thing down? I've committed to this, or I'm thinking about committing to this, but things are happening too fast, and I need to absorb it before I make a decision. So I raised my hand and said, and I can do it. And I'm in the room every single day. I don't advertise it. I'm just in the background. I'm answering phones and doing other things. But if there is a time that Michael's out, I could step in. Valerie's doing a great job of that now. So I know the setup. So it helps. Back to the disclaimer, CFRN. Basically, if you decide to go down that path, if you decide, hey, I want to be a member, that financial arrangement is between you and them. It doesn't pass through Bird the broker. It just goes directly to them. Okay. Anything on their website, Logic 247. Okay, a lot of you guys are passport holders. Okay, this is the Logic 247. Anything about this, contact them directly. Anything on their website, their videos, the Thursday night workshops. The great thing is that Valerie's been added to the support team. She's been there for a while. She can answer most of the questions. In the end, if you can't get a hold of Mike or Dwayne, you can always contact me. Okay. If you're dying to talk to one of those two, I can text them and say, hey, give Bart a call. He needs him to talk to somebody ASAP. So everything's fair game, all right, when it comes to contacting people and getting help. That's the big thing, getting support and getting help. Okay. So that kind of wraps up this disclaimer part. Okay. There is a fine line in between us. Okay. The relationship really started in the beginning when it was just the radio program. You know, just a short story here. When it was just CFRN radio, I ran into Dwayne somehow, and he said, "Hey, why don't you pop in on the radio program and you can answer questions, and we could talk about markets and reports and what's moving things." And it kind of started that way. And then in the end, or as this thing was evolving, in the message box, what I would see a lot of was, "Hey, Dwayne, can you teach us? Can you teach us? Can you teach us?" Him and Michael are trade station developers. Our platform reads easy language. Okay, I don't know how to do it. So don't ask. I don't know how, but you can program it, and so it just happened to be perfect timing, I guess, when it comes down to it. The platform's free. All you do is pay for data now. Back then, you didn't even have to do that, but you pay for data now, and that's it. So they encourage you to practice. We encourage you to practice. I encourage you to raise your hand, ask questions, and that's the whole point. All right, so that covers the boring stuff, but the stuff I'm required to talk about, so I'm going to keep that down for now. Okay, let me get a sip of water. Brand new guys, here you go. Here's your cheat sheet who sold this, okay? We're going to go over the trade setup that's happening in the training room every morning, okay? So here we go. First order of business is the time frame. We are on a 4-tick range chart, okay? So if you have DtPro, how the heck are you going to get there? Chances are you're on a time-based chart, okay? You could be on an hourly, daily. If you're certainly following logic, right? You're on a 30-minute, or you may even be on a 5-minute, right? The idea is to get on a 4-tick range chart. So the best way to do it is upper left-hand corner where you're changing the time frames. Little drop-down box there, left click, then hit custom. Box opens up and select range bar. Make that one look like a 4, hit OK. And right now you're staring at the ES, that's the S&P Mini on a 4-tick range chart. When you look at Michael's charts, he's got 4 or 5 different charts floating. They're all on a 4-tick range chart, okay? So that's the time frame you want to get on, okay? A big mistake people fall into, so do the right thing, go down to custom, but they select tick bar. Make that 2 look like a 4, and then it just looks like a hot mess, okay? This is wrong, okay? If you're staring at this, you fell into the first trap. Just go to custom, range bar, 4 ticks, right? The tip really is this guy here, parentheses and R. That lets you know that you're on a range bar, okay? All right. Let's get back on the page. So we're on a 4-tick range, okay? Now we're going to work on the top portion of the chart, okay? So some buzzwords here. The red and blue line is referred to as the MA1. Okay, nothing really fancy about it. The green line is called the BBC. That is short for bullish and bearish cross. Together, that leads us into step number 1, which is this. When the MA1 crosses the BBC and the MA1 is red, that's a bearish cross. When the MA1 is blue crossing the BBC, that's a bullish cross. So we have one that's highlighted here. That is a bearish cross because the MA1 is red. Okay, that lights the match. Okay, that puts everything in motion. Okay, as soon as you get the cross, now you're ready. Okay, it's game on. Okay, you need to be on alert. Okay, because after step number 1, after the cross, we're looking for step number 2. Okay, which is this. After the cross, the normal thing for the market to do, what we're looking for the market to do, is to gravitate or flag toward that green line or the BBC. So we're looking for a touch, okay, as it does here, but then a close in the direction of the trend, okay? It's all color coordinated, so if we have a red MA1, we should be looking for a red candle or a down close, okay? So again, the normal thing for the market to do, gravitate toward that green line, and then we're looking for the close in the direction of the trend. All right, here's the curveball, okay? After the cross, you're going to get in the habit of clicking on the trend line button, okay? The trend line button. The reason is, and here's the trend line button here, right there. All you have to do is left click on it and engage it, all right? That engages the trend line, trend lines that we're going to be drawing. Your chart should be filled with trend lines at the end of the day. Okay, Michael's got them all over the place, therefore you should too. Okay, the reason we do that, okay, let me go back to our diagram. The reason why we get in the habit of drawing a trend line, that's a terrible trend line. Let's try this again. I'm using a marker or a pen here. The reason why we draw a trend line is because we never know if it's going to get back to that green line and do the normal thing. Okay? The market might have so much bearish momentum, it will not do the normal thing. Okay? So we got to get in the habit of drawing the trend lines because this is normal. This is what we like to see. That's ideal. But if the market does one of these where it cannot get to the PVC and then falls apart, okay, we're in a position to take action. Again, it happens here. It starts trying to get to the PVC, but then fails. We're in a position to take action, okay? So you want to get in the habit of drawing trend lines after the cross. You're going to hear me hammer that this afternoon, okay? The idea is to get yourself in a position to take action. So you're not after the fact, or while it's happening, you're not fumbling it. So if it does happen, boom, it's a reaction to the DOM. Click the button, manage the trade, okay? It takes time, it takes practice. It doesn't happen overnight. For some, it takes more than the 90 days, okay? It takes time. That's why you're in the simulator, okay? So again, step number one is the cross. That's step number one. Step number two, we're looking for a test of the BBC. We look for the touch and then the close in the direction of the trend. MA1 is red. We have a red candle. Step one. Step two is checked off the box. Now our eyes gravitate toward the oscillator portion of the chart, which is referred to as the slingshot. And guys, the trade setup is down below in the slingshot, okay? And I'll show you why. Okay, but I'm going to break down the slingshot. Sorry, I'm trying to get some water in me. Okay, so here we go. We're in the oscillator portion of the chart here. So this red and blue line is referred to as the cycle. Okay, green line, that's just, there's nothing special about it. It's just the green line. Okay, but here's why the two are important. Okay, I'm going to break it down now. What the cycle is telling us is that the trend or the momentum is bearish. Why is it bearish? Because the MA1 is red. We have a red MA1, we have a red candle, and now we have a red cycle. Everything is the same color. When everything is the same color, that stacks all the probabilities in our favor. Okay? You should get excited when you see that. right? Not only that, the slope, we have a nice slope to it, okay? Nice slope. So it's saying, look, the NASDAQ on a 4-tick range chart, this is telling us it's bearish, okay? We need to be looking to get short, okay? This price action back up to the BBC, which is normal, right? We're expecting that. The green line, okay, is reacting to the price action above. Okay, this is pulling away, okay? What this is implying is this price action is just an air pocket or a pop-up in this ongoing downtrend, okay? That's what it's implying. The down close here is just an extra variable that says maybe this is happening, okay? Maybe this is true. That's why we just don't stick an order up here and say go short. That looks great after the fact, okay? But we sacrifice price for action. We wait for the down close because that's that extra clue that says, hey, maybe this is happening. And the green line pulling away from the cycle like a slingshot, that's where the name comes from, okay? It's like pulling that rubber band back, right? What it's saying is, hey, it's a pop-up. And then with the down close, together with the green line pulling away, this space that's outlined here, that is the divergence or the separation that Michael is talking about in the train room, okay? So from this point, what do we expect? In the end, what we expect to happen is the green line to pull away and then ultimately come down and close the gap. Go down and touch the cycle and repeat itself over, over, and over again until what? The momentum has changed. It's bullish now. So now we want the green line to pull underneath, create that separation or the divergence underneath. These air pockets are the divergence or step number 3 that Michael is talking about, okay? When this is happening, and the green line is pulling away, then getting back into the cycle, price will follow. And not only that, what we expect to happen is for the market to make a new pivot low, okay? This is our exit strategy. When the green line pulls away, then gets into the cycle, it's at this point we cut the trade loose, okay? From the entry to here, this is where we cut it loose, all right? Why do we do that? Because what we expect to happen, again, is the green line to pull away, get back into the cycle, pull away, get back into the cycle. So what should price do? It should follow along, okay? In some form or fashion, it should follow along, okay? That's why the trade exists down here, okay? Because you're looking for the market to pull away every time it gets into the cycle. So in the end, what you end up doing, right? That's our divergence on the bullish side. You end up selling that top and buying these dips. And then every time it gets into the cycle, you cut it loose, okay? It just repeat itself, okay? Now, does it act like this? No, it does not. It does a bunch of zigzags and craziness that drive us nuts, right? But every trade, in the end, has an 8-tick stop attached to it, as highlighted here. We do that because, sometimes the market doesn't do what we exactly wanted to do, and we have to protect ourselves. So if you're brand new, if you're trading the gold and the crude, if you're dead wrong, it's $80 a contract. If you're trading the ES, that's $100 a contract. If you're trading more like the currencies and the euro currency or maybe the mini Dow, that's closer to $40. If you're dead wrong, okay? The idea is to get the risk off the table right away. That is part of the money management rules that I'll go over in a few minutes. Okay? So in the end, I'm brand new. This is day one. What the heck am I signing up for? Well, you're not learning to pick the top or the bottom here. You're not learning to trade it from point A to point Z. What you're learning to do is take a piece out of the middle, following these basic rules. Okay? And along the way, as soon as it moves in your favor, you move the stop, move the stop, move the stop, move the stop until when? The green line pulls away and then ultimately gets into the cycle. And then you cut the trade loose. So you're taking a piece out of the middle. You're scalping it. You're on a 4-tick range chart. You're looking at the market under a microscope. Okay? You're signing up to be in front of the screens. Okay? Like I said, you have to be engaged in the marketplace. You have to be in front of the screens. Okay? Now, some of the other products allow you to step away a little bit. Okay? But what's going on in the training room, it's eyes wide open. All right? You have to be focused. Okay? So that's what you're signing up for. Okay? So that's a scoop. So what we'll end up doing is now we'll go into a live environment so we can get our hands dirty, okay? Let me put the question box over here. All right. First order of business, okay? And this is very important. And this is a trap that people fall into, okay? You kind of get hypnotized, and they get hypnotized by the Michael's charts because they're floating. There's about 4 of them there. They're blowing up pretty good. Blown up meaning they look like this, okay? If there's one thing that people fall into, they fall into the trap of the market that's trading sideways. They get caught up in the sideways market. So the number one rule, okay, if there's something that needs to be on the top of a piece of paper or a yellow sticky on the computer, the market needs to be trending. That's number one. The market needs to be making higher highs or lower lows. Well, that's pretty easy. That's obvious. Not really. Okay, anyone, in this game fighting the fight, no, it's not that easy. Okay, so one solution and a good habit to get into is hitting this zoom out button right here. Get in the habit of seeing a little bit more of the landscape of the market, or what the heck is going on to your left. Okay, because what might look like is trending, if you take a few clicks here, it might be sideways, and you avoid some of those bad trades, because if you just took a few minutes to do a few clicks, you might find out, man, maybe that's not so easy and obvious after all, because that's what we're looking for anyways, right? The easy and obvious trades. They don't happen all the time, but when they do, that stacks all the probabilities in our favor. All right, so Bert said to zoom out. That's what you should do. Hit the zoom out button so you can see if we're trending or not. Okay? So that's the first thing we're going to talk about and look for when we go into these markets. All right. Is the ES trading or trending? We have the bullish cross. Why is it a bullish cross? Because the MA1 is blue and it's crossing the BBC. Next question we ask ourselves, are we trending? Notice the first thing I do, zoom out, zoom out, zoom out. Right now, I would say high here, dynamic resistance here. No, we're not right now. It's not so easy and obvious. Okay? Not so easy and obvious. Okay? So I would hold off from any longs. Okay? If you're staring at this chart, you might say, hey, we have some higher highs. Okay? Okay? That's where That's where you sometimes get hypnotized. The good and the bad of it is this. Me doing this might keep me out of a trade, and I miss an opportunity. Okay, right?
Okay, then we're going to sell one single.
Mike on a blown up chart may take this opportunity, okay, and say, hey, it's all good. All right. I don't know. You have to figure it out yourself which one. All I'm saying from my observations of looking at hundreds of different screenshots from people, the common denominator, if someone is spinning their wheels, is that they get caught up in a sideways market. It seems to be this one here. So that's why I'm bringing it to your attention. Okay. In either event, we have the bullish cross. Okay. So we have step number one. The normal thing for the market to do is to pull back to the BBC. That is it right there. And we have an up close. So actually step two is present. We have a blue cycle and we have bullish divergence. Okay. So we have step three. So here's what we're going to do. See if we can get in there. I don't want you guys to touch any buttons, okay? Back. This is going to give me an opportunity to get inside the DOM and push a button, okay? So I can show you how to place an order. What I just did is I left-clicked in the green, all right, to get long. And we got long because we had a bullish cross. We had to pull back to the BBC. We had an up close, and we have the bullish separation and bullish divergence. My only reservation, and not getting excited about this trade, is that we do have, in my opinion, potentially a double top. So it's not so easy and obvious. But it gives me the opportunity to do two things. Number one, show you how to get long inside the DOM. But number two, check this out. See this little Tinkertoy triangle on top? And you notice how the bottom of the DOM opens up and closes? That allows me to place a stop loss right behind it. Okay? And if you check off buy stop and sell stop like I've done here, and you right click and go factor in ticks, it'll automatically put your stop 8 ticks away. Okay, if the factor is set at 8. Now the market is moving in our direction, right? Here's how you trail your stop. Sorry, it's going fast. All I did was left clicked over the 1 here. Okay. Left click. Sorry. Left click and drag. The stop now is at our entry or break even. The rules of engagement are, the money management rules are, when the market goes plus 4 ticks in your favor or closes on the other side of the MA1, that's this blue line here, okay, you move the stop to your break-even point or your entry. I have done that, okay? Again, money management rules, the idea is to get the risk off the table right away. So the rules of engagement are, if it goes plus 4 ticks in your favor, you're not sure, 1, 2, 3, 4, okay? You move the stop to break even, okay? We talked about what do we expect the green line to do. After it pulls away, gets into the cycle, and in doing so, the market should make a new pivot high. Given what we're looking at right now in the slingshot, what should we be doing? I'll tell you what I would be doing. Exit at market and canceling. I would be booking the profit if I were in this trade. Okay, so the entry was here, the exit was here. Okay, the exit was here because at the time the cycle was in, the green line was in the cycle. And as I said before, what we expect to happen over and over and over again is a green line to pull away, get into the cycle. Pull away, get into the cycle. Okay? So that's what we would expect to happen here too. All right? It's into the cycle. We expect some kind of a pullback. All right? That's the game plan. Now, here's that perfect example where chances are, Mike in the room grabbed what, 8 ticks? If there was 2 points in this trade, okay? And I'm sitting on the sideline, okay? That's something that you have to figure out yourself, whether you're going to do that or not. It had all the variables, so that's why I felt comfortable showing you this one. It just happened to be on the first trade, nothing magical. But it had the bullish cross. It had the pullback to the BBC. That's a pullback right there, that wick. The close is green. That's a bullish close. We had a blue cycle and a good slope, and we had the divergence. We had all the ingredients. Even the MA1 was blue. So again, if you're going to lean on doing something that might not be easy and obvious, I think if all the variables are there, okay, obviously number 1 is easy, but the variables, more especially the cycle is blue, and it's got a nice slope to it, and the MA1 is blue, okay, you can feel, I would say with some confidence, maybe there's a risk you might be willing to take a risk there, okay, just an observation. If all the steps are there. All right, so that walks us through that one. So let's go fishing somewhere else. Let's go to, Michael has a lot of success in crude, so let's go check out crude. Here's another example. That's a trend line. Notice the first thing I just have it, boom. Grab a trend line and start drawing, okay? Bullish cross, a pullback to the BBC, doesn't quite get there. We have a blue cycle, and we got a separation, okay? Trying to get long right here. See if I can do it at the same spot. Win, lose, or draw, we'll just get in the habit of, again, getting inside the DOM and executing. What I just did was I left-clicked, okay? I left-clicked in the green to create a limit order, okay? I'm saying, hey, I want it at my price or nothing, okay? Notice the bracket is selected. Notice the buy stop and the sell stop is checked off, and the factor is 8. How do I get it to 8? Right-click over the word sell stop, factor in ticks. Right-click over the word buy stop, factor in ticks. Just make it look like an 8. The reason you do that is another question about it, because a lot of times all the markets are different, okay? They all have their different decimal points and different values, and so that becomes very confusing. What we do know from our rules is every trade has an 8-tick stop attached to it. So just have a common denominator, ticks, then it's pretty easy. If you do everything in ticks, it just keeps it simple. All right? Okay. So here we go. So we're just waiting for this to go how far? Plus 4 ticks in our favor, okay, before we can move our stop to our entry. Where's our entry? Right here. Okay. If you're not sure you're long, it says right there in the DOM, position, open P&L is moving, and this big green line in the middle of the chart here, right where you got long, is also defined. There's about 4 spots that says, hey, dude, you're long. Okay, you can't miss it. And by the way, here's our stop loss. It's right here. Okay, that's our stop loss. And, another good thing that you guys should do and get in the habit of doing, do this. Trading, position and order management, working orders. Should have this box open. This stop loss is in the box. The reason you do that is because for whatever reason you shut the platform down. Here's a mistake that people make a lot. They think they're out of the position, but they have open orders pending. Two things that can happen. Number one, it's going to work against your margin because the computer thinks that you're trying to put a position on. All right. So if you don't have a lot of funds in your account and you start getting a rejection, that's usually a common factor. So that's the issue. The other reason is, for the obvious one, you forget about it and the market trips it. You have risk on the table. You're in the marketplace with no stop at this point. Okay. So if you have this box open, if you cancel that order, it disappears. Okay. So get in the habit of having that box open. Okay. Yeah, I placed the stop. Now you see the stop in there. So right now we're looking for the crude to go plus 4 ticks in our favor. So that would be here, or close on the other side of the MA1, which is there. Once one of those two things happen, it'll be one and the same in this example. We move the stop to our entry. Our entry is here. Okay, so now we're going to sit and wait. I'm going to go down a little bit here. Okay, see what happens. Question is, are we trending? Yeah, we're trending. Okay. We have been in a downtrend here. Okay, but we've done this. All right, give me 1 second to pick up this line. 1 second. I forgot to tell you guys, if my phone will ring, so if that happens, I'll have to put you on hold and hit the mute button. But I should have told you guys. All right, well, we're going to get stopped up here, possibly. Okay. So, see what happens. Every trade has an 8-tick stop attached to it. Okay. It has all the components. Okay. That means it has a bullish cross. Here's the attempt to pull back to the BBC. We drew a trend line. Hold on, let me blow this up. We drew the trend line. There was the close above it. Okay, so let me go through it again. Bullish cross. Attempt to pull back to the BBC with the up close. Cycle is blue. Green line's pulling away. MA1 is blue. This is dynamic resistance. Dynamic resistance was broken, so that was giving us a clue that maybe we're heading up. So it has all the variables for it to go up. It's just not working out. So we'll see. All right. So, all right. So while that's messing around, I will put an alarm in here. If that comes back up, we'll manage it, okay? But let's not stare at, let's go to a different market because we're trying to get enough looks at things and try to metals. Let's go to gold. Let's see what's happening there. Okay, so the question is, are we trending? Okay, are we making higher highs or lower lows? Okay, here's a good example. Dynamic resistance, dynamic resistance. That is not a market that's trending. Okay, now convert, we popped over it. Now we're trending. Okay, right here gets us excited about getting long. Okay, now we broke out of that trend. The normal thing for the market to do is pull back to the BBC, and we're looking for an up close. Okay, so that's step 2 right there. Okay, let's blow the sucker up a little bit and dissect what's going on. A few things. Okay. Number one, that's step two. We have a double top in place, so we stopped trending. Okay, so we're not trending anymore. Okay, we broke out of this congestion back here. Okay, we started to get back on the path. All right, but now we ran into another brick wall for whatever reason. Okay, so before we take action, we really need to get above this high. Okay, it looks like you stepped out on the crude. All right, so we really need to get above this level. Okay, if we're drawing a trend line, here's your trend line. Okay, let me give you another observation here. When this is happening in step number two, notice the cycle went from being blue to red. Okay, here's another rule. If the cycle turns color on you, all right, so if we're in a bullish formation, we should be looking for a blue cycle. Okay, if that turns red on you, the trend line is required. Not only is it required, but a close above the trend line is required. So the trend line is originally drawn like this. Now it's adjusted like that. That is your first close above the trend line. Okay, two things. We have a double top, so we stopped trending. But now the cycle has turned red on us, right? Not only has it turned red, it's now at a 45-degree angle against us. Okay, this is another disqualifier right here. Okay, if the cycle is a different color and going in the wrong direction and it's at a 45-degree angle, no trade. No trade. Okay, now you're looking at it and going, but look, Bert, it's going up. You kept me from making any amount of money. That's true, because most of the time it will backfire on you. The results are usually sideways, okay, which means a lot of just break evens, but the house loves you for it because you traded a few more times. But it usually results in break even trades, okay, or stop losses, okay, in the gold that's $80 a contract, okay. Here's the trap that people fall into, okay. All it takes is one, okay. The opportunity missed. They missed that opportunity to make 80, 90, 100 bucks. So guess what? Next time you're like, man, forget what Bert said. The next time that happens, I'm just getting in. Well, that's the one that stops out. And then you might have 2 or 3 in a row, and then you have egg on your face a little bit. I've been there and done that in different forms or fashions. It's just, it's a psychological thing about trading, okay? So if the cycle is red, or if it turns a different color, a trend line is required. A close on the other side of the trend line is required. And if it's going against you at a 45-degree angle, that's no good for the home team, okay? For the same reason, right? This is momentum, bearish momentum, okay? We want to see that, but we want to see it blue in a bullish backdrop, not red. We talked about that rule back here, okay? We want to see a cycle that's in the direction of the trend with a good slope to it. What's a good slope? A 45-degree angle. This one is going against us at a 45-degree angle, but in our face. That's no good, okay? So again, usually the results are a lot of stop outs, stop losses, and then it's just a few that just run, and then you get frustrated and you get mad at me, and but that's the truth about trading. Okay. All right. Go back to the ES. Zoom out, zoom out, zoom out. Notice that's a good habit I get into. Okay, we broke dynamic resistance. Okay, let's draw a trend line together. Your trend line should look like mine. Okay, normal thing for the market to do, go back to the BBC. Okay, is the trend line required? Yes, it is. Why? Because now the cycle is turning red. Is it turning against us? No. But what we do know is that this is watering down the probabilities. All right, so that means beware, beware, beware. Okay. Do we have divergence? Is that green line pulling away from the cycle like a slingshot? Yes, it is. Okay, so we have plenty of room for this thing to run if it takes off. Okay. Let me tell Clark. I'm in the micro. All right, let me tell Clark 1 second. Oh. Sorry guys, I didn't put you on hold, but he keeps calling and I keep missing him, and that's all right. I'm in the wrong contract. All right, same thing. Okay, a little different picture, still blue. All right, so here's the cool thing. Here's what's setting up. Something you're going to hear in the trade room. If the low is 305, the high has to be 306. You're going to place a buy stop in at 306.25. What did I just do? Inside the trading room, because we know the height of each candle is 4 ticks in height, Mike can be proactive in placing orders. That was an example of Michael being proactive. Okay. So the fact that he knows that the height of each candle is going to be 4 ticks in height, he can place a buy stop, okay, which I did, above the current market price. So if the market takes off, we're in a position to take off with it. Okay. If we get some kind of bearish setup, well, he can place a sell stop below the market to take advantage of any market that just kind of breaks down. Okay. So you are going to see a lot of that from Mike. So I'm preparing yourself because this is an eyes wide open approach to training. Okay. Okay. So let's see what happens here. Okay. So if the low is 5, then the high has to be 6. Okay. So in order for it to print a fresh candle, it'll have to go to 306, 306.25. That's why my order is there. Okay. Will 306.25 be above the trend line? Will that be an up close? Yes, it will. It'll be above this down trend line. So it will qualify. And in fact, it'll be fall into that category of a momentum trade. Those guys that are CFRN members already know what the heck I'm talking about. But that was the kind of a unique situation where I was able to talk about a lot of the things you'll hear in the training room. Here's one big one. Mike does this a lot. Okay, he is anticipating the move when all the rules are in place. Okay, all the rules are in place. Bullish cross. Pull back to the BBC. We're not sure if we get there. We draw the trend line. The color is the cycle. It's blue. Do we have separation? Yes, step 3 is in play. Okay, so all it takes is a close above the trend line here. You get long. Okay, so let's see what happens. We broke dynamic resistance here. So we broke any kind of resistance. That's the up close. All right, so it's time to get in there. All right, that is the up close. Okay, right there. Long from 30.06. Here's that 8 tick stop I promised you. Why is that in play? Because when we hit the bracket option up here, sell stop is checked off, buy stop is checked off, and the factor is an 8. Its factors are in ticks. All right, let's see what happens. So if it goes plus 4 ticks in our favor, that means if it goes here, that'll be at 30.07. We can move the stop to break even. That'll also be a close above the MA1. So it fits in a couple ways. Okay, and it's probably fitting because then we'll be challenging this old top. Okay, so let's see what happens. I'm going to skirt this up a little bit. If it gets running here, it may actually get to this old top over here, but we'll see. Okay, the market's kind of mixed. We have the NASDAQ up 60, the Dow down 70, the Russell and the mid caps are a little lower to mixed. That's why you're seeing a lot of back and forth here today. It's just nonsense in the indices. But all the rules are there, so we'll go ahead and play a win, lose, or draw. Okay. So in the end, we expect the green line to pull away and ultimately find a way to get into the cycle. That cycle is the blue line here. Okay. And in doing so, this should make a new pivot high. It should. If it doesn't, we're going to get stopped out. And with 5 minutes left, we can just manage this one and call it a day. So, like I said, the biggest thing that people fall into, the biggest trap if they're spinning the wheels, is the trending thing. And if you're not sure about that, the dynamic support and resistance dots will help. Okay. So as you zoom out, okay, the good thing is if, like right here, there was a top here, you had dynamic resistance here, that would be a problem. Okay. I wouldn't be too excited about that. The fact that we're trading above dynamic resistance, okay, should give you some confidence. So maybe we're still stepping up. Maybe we're going to challenge this top now. Okay, so use the dynamic resistance, support and resistance dots in your favor. Okay. All right, so if we get it closed on the other side of the MA1, we're going to have to move the stop to break even. The break even is right here. If you're not sure, it'll show you there. Show you here, and then it'll show you right in here. Okay. So again, there's several spots for it. It'll tell you, hey, this is where you're long from. Okay. All right. It'd be like watching paint dry, right? All right, just waiting, guys. This is why I can do this in slow motion between 1 and 2 o'clock. Usually there's not much going on, okay? But it's a good time for me to go over the rules and throw out some observations and get maybe our feet wet in a few things. If it doesn't happen the next couple of minutes, I'll just get out of it so I don't bore you guys. Okay, but you guys get the gist of it. Okay, the framework is there, the rules are there. Okay, we just need the market to cooperate. Like I said, when I have the Dow down 70 and the NASDAQ up 60, yeah, there's going to be a tug of war with the S&P. Okay, so you're going to have a lot of choppiness. Boy, do I get a lot of emails. All right, a couple more minutes and then we'll see. We need the come on baby indicator. Well, there's the up close finally. The result will be a break even, but we're going to play it by the rules. I just moved our stop to the entry. The reason, we closed above the MA1, correct? That candle there, put it our stop to break even. Okay, if this thing takes off, the green line is expected to get into the cycle and we make a new pivot low. All right, so here's prior resistance, right? So I am going to move it up just a tick in case we bang off this and fall apart. Okay. I have it 1 tick ahead. Why did I do that? Oh, because there's some resistance right here. For whatever reason, we rejected this level. Okay. So if this doesn't about face here, I'd probably save myself a tick. Okay. It's either we're going to barge the door down and challenge this high here, or we'll fall apart. So that's plus 4 ticks in our favor too, so that's good. Step 1, the bullish cross. Activate the trend line. Step 2, the normal thing for the market to do is gravitate toward the green line. During the process, we draw a trend line. Why? Because we don't know if it will get here and do the normal thing. Our eyes gravitate toward the slingshot. What color is the cycle? It's blue, so that's good for the home team. The green line is pulling away, therefore we have the separation or divergence. Okay. Even the MA1 is blue, so it has all the ingredients. That's why we went in here, left clicked, and got long. Our stop was at 8 ticks away, so it was down at 30.04. The fact that we closed above the MA1 and now 4 ticks in our favor, our stop is now right here, 1 tick in front of our entry. All right, that's where we stand. What's the next step? We expect the green line ultimately to get into the cycle. When it does, hopefully the S&P makes a new pivot high, and then when these two intersect, we get the heck out of Dodge. That's the game plan. Okay. Move it up one more just because that's what we want to do. See, the green line's getting into the blue as we approach this level here, so that might be good timing on it. Okay. we have a few ticks. Have a few ticks. A little bit higher. I'm just going to move up one more because I'm bored. I'm moving a little bit closer because the green line is approaching the blue, so we're going to get a little bit closer. All right, looks like we're out, which is fine. Okay. All right, so we're out 30.0675. Okay, so that one was a pretty good one because it checked all the boxes off. Okay, so again, I would say good habit to get into. Number one, zoom out, see if we're trending. If you're not sure, dynamic support and resistance will help. Breaking dynamic resistance in this example gives you some confidence that maybe we're trending. Also get in the habit of looking left. Okay, this will tell you a little bit more of what's going on. Okay, one of the big traps that people fall into, sideways markets. Okay, they do that because they get hypnotized by the blowing up charts. Okay, get in the habit of zooming out. I think you'll solve that problem. Okay. Also get in the habit of activating the trend line as soon as you get the cross. And you do that for several reasons. And number one, we never know if it'll get to the BBC. But number two, if the cycle turns color on us, that trend line needs to be drawn. So if you have it drawn in advance, great. Because if you'll be in a position to take advantage of the market if it does take off. Okay. If that cycle color is a different color, that should alert you that's watering down the probabilities. But furthermore, if she starts curling over against you, especially at a 45-degree angle, man, do not take the trade. Okay, that's a disqualifier. If you're not sure if it's a 45-degree angle, don't take the trade. You're on a 4-tick range chart, you got about a handful of markets you can really look at. Just look for the easy and obvious ones, okay? Every trade has an 8-tick stop attached to it. As soon as you get into the trade, it's just money management. The idea is to get the risk off the table right away. So when it goes 4 ticks in your favor, you move the stop to break even. If it closes on the other side of the MA1, you move the stop to break even, all right? You can split it to +1 if you want. If that makes you feel better, do that, okay? The idea is to get the risk off the table. And no, we don't select these boxes. These are targets, okay? Ideally, you want to let your markets run, okay? You never know when you'll get a market that just gets crazy, okay? So you want to keep these boxes open, okay? You just want to trail your stop, trail your stop, trail your stop to the best of your ability, okay? That's not easy, but when things are rocking and rolling, that's a really hard thing to do, okay? All right. So rookies, guys that are new on the trial, you can lean on this video, all right? If you have any questions, you can always call or email me. If not, I'll see you in the training room in the morning. I'm in there every morning. Just raise your hand and just ask questions.